Okay, we start the week lower. Again, we're going to have inflation data Wednesday and Thursday, the CPI and PPI data. We had Nvidia gap down today, and that dragged the market lower. The Dow ended down just over 0.5%, down 241 points lower. The S&P was down 0.61%, down just over 37 points. The Nasdaq was down 0.62%. Very similar to the S&P 500, and the Russell just a little bit more, 0.67%, down 16 points. The VIX was up 11% today. The VIX jumped back above 14 at 14.19. It jumped by 1.42, jumping 11.12%. You know what that means. You know. That means in the next two sessions, the VIX is predicting an update for the S&P 500. Tuesday or Wednesday, there's an 85% chance the S&P will have an update, either a bounce or a short-term bottom. 15% chance that fails. It's just based on historical data. Historical data on the VIX and percentage moves of greater than 10%. Now, we're getting the sell-off, and I talked about the divergences on the 60-minute chart, so I'll show you that in a moment. But the VIX is getting back above the 10-period moving average. It's still below the lower band here. The band is tight, telling us something big is about to happen. The 50 is above the 200, telling us, hey, the S&P is probably in a topping process. That's what that's likely signaling. But you've got these divergences. And I talked about how sometimes the VIX will bottom before the S&P tops. Sometimes it will top before the S&P bottoms. Always the spike right here in August, they bottomed and the VIX topped. They did it simultaneously. Sometimes it does it that way. Many times the VIX will bottom before the S&P does top. So do keep that in mind. We're watching the trend lines. I'll show you them if you watch the video all the way through. We're turning off one of them from the July peak. I'm going to be watching the VIX to see if it tries to carve out a bottom here. And then we'll be watching what happens with the S&P 500. Is this a pullback or do we start a reversal? That's what I told you to be watching for off that trend line over the weekend. Regardless, the VIX is predicting an update in the next two trading sessions on Tuesday or Wednesday. And Wednesday we get the CPI. VIX is predicting that we will have a bounce or a bottom on the S&P 500. We can go lower on the S&P 500 before that occurs. But it is predicting we'll either have an update for a bounce or we could carve out a short-term bottom. Again, I just want to continue to point out, and I have the VIX here, just with the 50 and the 200, with the price invisible, because I want to continue to point out this 50 is above the 200. Now, again, when we had that happen, the last time around, that was the 2022 sell-off. We dipped below the 200 briefly, and then, again, we bottomed out, and we ended up in the diversions at the 2022 bottom. Over here with the pandemic sell-off of 35%, we had it with these others, and I just want to continue to point out this is a huge red flag for the stock market. Again, it's suggesting that we're going to get a major sell-off, retopping process, which we did have the same thing happen in 2007. I think we could see something very similar to that, because we know that recession is getting ready to happen. And I think you got a really good shot that the market tries to peak in December or January. I know that 6 months from the SOM rule being triggered in July will be in January. 9 months would be April. You're probably going to see the recession show up in the first quarter. The stock market will peak before that recession shows up. So again, aware of that with all these divergences that we have in the weekly and the monthly time frame that I've been talking about. So much complacency right now, and I went through at the end of my last video on Sunday sentiment, and the sentiment is off the charts, but it's diverging with the S&P 500 as often is the case. Is the fear-greed index, which I talked about at the beginning of the Sunday video. Go watch that video. Some interesting things in that video. Now, Nvidia gapping lower, it ended down 2.55% today, back down to test the 50-period moving average, down to test this trend line once again right here, getting a candle of indecision, a doji. Again, I talked about a right shoulder forming near this 144 area. We came up and we just overthrew it ever so slightly. Got a doji there, and we're getting the sell-off that we had on Friday, and then now a gap down. I believe that a right shoulder is developing. We'll probably go back and fill the gap. I think the S&P is still going to reach my objective target in that 6,100 level, but I do believe that that Nvidia has topped, and it is diverging with Nasdaq like it did back in June and July. In July, we got a lower high for Nvidia. Nasdaq moved up and made a higher high, and they diverged from one another. So I think you're seeing a similar situation here. I think this head and shoulders is still going to continue to carve out, and I think we'll likely bounce here. And I think of a bigger pullback because we are getting momentum flipping here on intraday charts. The trend is still intact right here so far, but again, if the intraday charts start having momentum or the trends turn bearish, there's risk of a bigger sell-off. Like I said, we could, even if we get a bigger sell-off, we still could reach that upper boundary of the rising wedge I've been talking about. We did have this little divergence play out here at intraday charts. And that's given us a sell-off. It may evolve into a bigger divergence like some of these other divergences that we've seen develop. Momentum turning bearish here today on the S&P 500 as we start the week off for the intraday. Same thing here. Again, we're seeing momentum shift, but not the trend yet. We'll be watching to see if it does, and if we do end up getting a bigger sell-off, does the trend line right here hold with our rising wedge? But like I said, I still think we're going to reach that upper boundary, so we'll be watching. The sell-off we got didn't reach the lower boundary, so we'll be watching this sell-off right here. Is it something smaller, or does it evolve into something bigger? Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. I don't have any sponsors, just a direct relationship with you. So if you could do something to help out, I would really, really appreciate that. I thank you for your consideration for that. Just follow the link below. It'll take you to a secured site, and you can donate any amount you want or make it a recurring donation. Thank you. Now, we did get some signals with today's sell-off. The last group of signals that we got like this, again, just amounted to a pullback, the 20-period moving average not seen on this chart. Again, this could be a reversal or just a pullback. Same signals were present back over here in July and led to a much bigger sell-off. So we'll see what happens. But today's bar, we did get a signal. Again, this is looking at momentum, possible short-term top. The momentum line is still bullish at this point. We'll see if it turns bearish. We still have this divergence with momentum. May end up seeing another reference point if the RSI ends up forming a divergence, which again I'll show you in the video. Getting some warning signs that we may get a bigger pullback or possibly start a reversal. Now, there is no T present above today's sell-off. Momentum line still bullish. Again, we have this potential divergence here with momentum. Could a top develop in December or January? Yes, we could see a top develop here in December. Drag out to January. We're going to be watching. But again, that recession is likely going to hit the first quarter or early the second quarter 2025. Paying attention here as we're turning down off that trend line, upper Bollinger Band in the daily time frame, the trend line of the rising wedge, which I've been talking about. You'll see it in this video. Now, we could see a bigger pullback off the trend line that I'm talking about in this video on the S&P from the July peak. We could just get a reversal off of it. My guess is we're still going to go to the 6,100 level, reach the target level, the upper channel line on the weekly chart, and the upper trend line on the rising wedge in the daily time frame. But again, want to make you aware of both scenarios. Of the future, I'm just telling you what I think. I'm looking at support and resistance levels. Now we're turning off a resistance level. We have another level of resistance if we clear it. We got a red awesome oscillator bar. Now, again, it could be that we get some red awesome oscillator bars and then still get a divergence here on the awesome oscillator moving closer to the Fed meeting. That's still very possible. Even if we see a reversal of conditions with momentum. The Dow got that today. The S&P is testing the 10 period. We still have a green cloud. Red bar. No red bar yet on the Nasdaq, but again, What happens this week with the inflation data? Sometimes you go, you get one report and you're down or up, and the other report does the opposite. Something like that. Do you expect inflation to start aggressively higher? Do we get a really hot report with the inflation data, with CPI, PPI, that to produce a narrative that, we're not going to get the cuts out of the Fed now? Inflation's going to go up and we're still going to get the cuts. That's exactly what happened in 2007. I've talked about it over and over. Because the Fed right now, they're focused on inflation, not on the recession, when they should be focused on the recession. So we'll see what happens here again, but we could get some more red bars. Do we see it turn back to green immediately? We'll be watching. But the Dow did drop below the lower boundary of the cloud, flipping the cloud to red today. S&P did not, but it's got a red awesome oscillator bar. And Nasdaq did not. We still have the divergence on the MACD. We've got a potential divergence on the awesome oscillator. But like I said, it could be that we start seeing some red bars, and then it goes something like this, where you get a divergence here, maybe going into the Fed meeting or something, but we're watching. But again, we still got a bullish reversal of conditions. We just changed the bars, reflecting the trend. Blue bars, green cloud, and green awesome oscillator. We'll see if we get more red. Join the S&P. It could be NASDAQ tops ahead of the S&P and they diverge. Very possible. Start the week off with green awesome oscillator bars. Here's NASDAQ weekly chart, still green, but the divergence is present. Same thing on the MACD, and we got a little divergence here in the more recent price action there on the stochastic. It's true for the S&P, another green awesome oscillator bar, but we still have, again, the multiple point divergence present. Same thing we're getting on the MACD, again, a divergence in the more recent price action on the stochastic. So again, my guess is we're going to end up going a little higher and then turn, but we're going to be looking at both of the trend lines in the daily time frame. Again, coming down off of the July trend line. You'll see in this video. The Dow did get a reversal of conditions for momentum. See the little red arrow? It means we close below the upper boundary of the cloud. You've got the red awesome oscillator bars that have been present on the Dow. Again, a divergence end up developing here in the more recent price action on the awesome oscillator. We'll be watching. Over the weekend on Sunday, I talked about the Dow's daily and weekly chart. I'll refer you to that if you didn't get a chance to see that. Again, watching the 9 counts. One thing to consider is NASDAQ could be peaking and could diverge later with the S&P 500 if it goes up one more time, yet it has already diverged with Nvidia. So do keep that in mind. We're turning off of a major trend line right here that I'm looking at, but this is from the July peak right here. And again, from our rally with the presidential election results and the Fed. And then again, we've turned off of that. Again, my guess is we're going to go up and hit this upper boundary, but I told you I could be wrong about that. We could just turn off of this trend line. Got the guts to tell you what I think, and I think we're still going to go to 6,100. Could I be wrong about that? Could it be close but no cigar? Yes. So that's why I'm showing you both of these trend lines and showing you both of the scenarios. My guess is we're just pulling back and we're going to eventually go up to this trend line right here. Probably, and again, had we hit it immediately, we would have been in that lower end 6,100 area. If we pull back and we go up and we hit it like that, then we'll be at that high 6,100 area, and that's where the trend line is in the weekly time frame. So just some things to ponder, some things to think about. But again, regardless of which way it plays out, again, I'm looking for a top, looking for the blow-off top to come to a conclusion here. We had the 13.9 double sequence count reversal signal. We went just a little bit higher, and we turned off this trend line. Still may not be over. We still may go just a little bit higher. And again, sometimes you turn immediately. Sometimes you go a little bit higher. Here we went just a little bit higher. I think we'll end up going a little bit more higher if we can clear this trend line. But I'm watching closely. We'll rally further. Two important market movers, either up or down, could be the inflation data this week or the Fed. Now, if we're selling off ahead of the inflation data, we'll see if we try to bounce with it. We'll be watching a week and a half from now. We have the Fed meeting. And again, the Fed meetings, they often mark tops, bottoms, and continuations of the trend. This rally, I told you we would move to new all-time highs back here when the Fed began their rate-cutting campaign. I told you we would get a Fed pivot rally to new highs. We did. Nasdaq finally filled the gap in October. S&P turned down, but it never reached long-term trend line on the monthly chart, and I told you that was still likely. Talked about a rally ahead of the presidential election. Talked about a rally over here. Still think we're going to get a rally here, likely up to this upper boundary right here. So again, just two trend lines I'm watching. But the 13.9 is telling you prices are getting tired. Okay, and the other nines, they gave us pullbacks. This is likely going to end up giving us a reversal. Maybe that's starting off of this trend line. Maybe we go a little bit higher. Again, my guess is we're going to go higher, but it is possible that we do turn off of this trend line and fall short of the channel in the weekly time frame. Now again, I still think we're going to reach this upper boundary of the channel on the weekly chart, likely into the high 6100 area. Now again, it may be close but no cigar, but I do think that it's likely going to be the case. And if we fall short of it, again, I'm looking for a topping process. I'm looking for evidence. I'm looking for clues. I think that this trend line is probably going to be reached. Again, if we exclude the shadow right here, this trend line from the highs earlier in the year, again, intersects with that area. I want to continue to point out this trend line on the monthly chart quickly. Again, from 1929 to 2000, we've tagged that level and we've slightly overthrown it. Now pulling back a little bit, I think that likely overthrow it a little bit more and reach the 6100 area. But again, we've reached my target. That was Black Friday that we reached that target, that mid 6000 area, reaching this trend line just over a week ago. For all-time highs to reach this trend line, we just did it on Black Friday just over 1 week ago. Now it's time to be watching for the top, the blow-off top, to complete now that the objective target has been reached. But I have told you over and over, I believe we're going to overthrow this level and reach 6100, move into the 6100, the mid to high 6100 area, reach that target level on the weekly chart. I still think that's likely going to be the case. We tagged it the last day of November, the trend line going back to 1929. We tagged it, and then we started the new month in December. We had moved above that trend line. I talked about that over and over again because I talked about moving to the 6100 level. We came to just under 6100 at 6099 and began to turn off of it, the trend line from July in that daily time frame. Again, if we pull back and get above the July trend line in the daily time frame, I think we'll overthrow this a little bit more. We'll see what it looks like by the end of the month. Do we have some kind of topping tail or reversal surrounding this trend line? But I do still think we're going to overthrow it. But we've met the objective target now, reaching this trend line. So a top can unfold in different ways. So I'm looking for clues. This is why I keep saying the S&P is going to make new all-time highs to complete this blow-off top. And then I think you'll see a peak, and then you'll get this reversal and usher in the bear market, and eventually we'll likely get an initial 20% drop. The market peaks very quickly, likely over a 2-month period, just under 2 months or just over 2 months, but probably something like that. Here's what happened on Monday. We gapped lower, went back and filled the gap on an intraday basis, and then we continued to drop for the first several hours of trading here. Got a rebound back up, a couple of hours there, and got a rebound back up, and then came back up to the 50-period moving average. Again, it had crossed below the 200 here in the 5-minute time frame, and then turned back down. You got a divergence. Now, again, these short-term charts, again, this is just looking at short-term price fluctuations. You can get a divergence, and it just gives you a bounce. You can get a divergence, and it can produce a reversal. Never know with the shorter term time frames what happened today. Again, I talked about the divergences over the weekend. I talked about the divergences right here. We had it on both Nasdaq and S&P. We broke down and we began to come back to fill this gap, and now we're testing the 50 period. We're testing the 10 period in the daily time frame, and again, we'll be watching the gap fill. Do we try to find a bottom here? And this is at the 60-50 area here that we inched down to fill that gap. We did do it, and then we closed just above it at 60.52. So just right above that gap fill area. We tagged it. Still maybe a little bit more work to be done. We'll be watching. Talked about the possibility of a larger divergence developing, coming down further. If we built upon the divergences that had already been in play, and again, possibly forming a larger divergence here in the 60-minute time frame. Why? Because we still haven't reached the target level, the upper boundary of the rising wedge on the daily chart or the trend line on the channel line on the weekly chart. I still think that's a strong possibility. And if we just zoom out here again, we can see divergences have marked larger turning points with the ups and downs. So again, I think that while this divergence very well could give us a reversal, it's very possible, again, that we just stop making new highs and that we do more technical damage off the trend line from the July peak. I still think we're going to end up coming back up here and hitting this trend line and likely forming a larger divergence on the RSI here in the coming days ahead. I still think that's likely going to be the case. But the MACD also had this divergence right here. Again, do we firm up and see the MACD, turn back up, or does it go negative? And if it goes negative, is it there briefly, or does it stay there and we get a bigger sell-off? So going to be watching to see how it unfolds. But I'm watching these two trend lines closely, talking about both of them all last week. And you can see the one trend line right here from the July peak, and we're going down to test that 10-period moving average. What's likely going to be the case here, I have both of the trend lines. And again, I've talked about, again, the bounce from here, the bounce from over here ahead of the election. Talked about over here a pivot rally and then a breakout and back test. So again, I still think we're going to reach this upper boundary line. And if we pull back a little bit and then reach it, you're going to be going right into the 6100 area. Now, again, take our time reaching that area should we be able to do it. Again, the further right you go to the chart, the higher the trend line target goes. Time hitting it, we may overthrow the 6200 area. This drags on into late December, on into January. Then again, the trend line will remain the same. That's the target. Will rise as time goes on. So do keep that in mind. That's what I'm looking at. But I think we're going to pull back here, and then I think we're going to move up there in all likelihood. And again, that could form a divergence on the RSI right here. Back at the July peak here, we had this really nice looking divergence. Maybe we're going to see something like that develop right here on the RSI, going back up to test that trend line once this pullback is done, maybe at the 10 or the 20 period moving average or whatever. But right now we're pulling back off of this trend line from the July peak. I still think we go higher, but again, open-minded to reversal off this area. I just think we're still likely going to reach the other target level, even though we've reached my target in the monthly time frame on Black Friday, the last trading day of November. Now, potential diversions here on the MACD, we could see the same thing happen. It could roll back over or turn back up, or maybe it's prevented from rolling over if we bottom sooner rather than later. Stochastics rolled over, but just got to be watching, again, witnessing a top surrounding this trend line and the trend line on Nasdaq that it slammed up into and turning down off of, it just overthrew it. Or again, do we buy a time? And if we do go higher on the S&P, does Nasdaq end up diverging with it? We got to close above the upper Bollinger Band by just under 1 point when we hit that trend line. Got a red bar, hit it again, and now turning off of it here. The highs from Friday and today, turning off of that level. We're at extremes with momentum. So again, we'll see. We've moved to a new high here above this peak over here. Do we form a brand new divergence right here? So again, I'll be watching the 10 and 20 period moving average. I'll be watching the trend line down here as well. We are watching, again, I do expect the CPI and PPI data to eventually tick back up. We'll see what happens. PPI on Wednesday is the year over year is supposed to be higher on the headline number, but the core is supposed to be lower year over year. I went through those figures over the weekend for you to that. Now, while the S&P is turning off of this trend line with the July peak over here, turning down off of this trend line, the Nasdaq is also turning off the trend line from above that, which is this trend line right here. That's why I'm saying they still could diverge. S&P is not above the upper Bollinger Band. Nasdaq did get above it. We tagged it by less than 1 point and turned off of the trend line. Again, Nasdaq came right up to that trend line, just slightly overthrew it, closed above the upper Bollinger Band again after we had already done it here, and then now we close back below it. Watching, do we get a bigger sell-off? Nvidia is at the 50 period. You're watching that. It looks like we have Oracle earnings and after hours, and there was a miss. Got this really nice looking rising wedge here. S&P is coming back to the gap fill area from a few days ago. The S&P is not, or the Nasdaq's not there. Nasdaq already pushed above that July peak. S&P did not. Again, going to be watching the S&P and Nasdaq diverge. As the Nasdaq turn off this level and we start seeing a top, did reach a new extreme a little bit higher than this level. Again, you can still get a divergence. You could still come down and still hit this level again. Sometimes rising wedges, you get overthrow moves. You have this nice looking negative divergence right now here on the MACD, so we'll be watching that. It's a possibility of a peak on the S&P and Nasdaq as they're both turning down off trend lines. I still think the S&P is likely to reach the one from back over here. Nasdaq already has. Stochastics rolling over. So again, we'll be looking how big of a sell-off we get, what happens with the inflation data, and again, inflation data give us a big push down or try to rally with it. We'll be watching. Even if bad news happens, still rally. The markets could remain irrational. Nasdaq had an overthrow of this trend line here in the weekly time frame, still under that monthly trend line just a little bit. If we hit this upper boundary right here, we would likely slam right into that monthly trend line on the Nasdaq. Got these divergences present, so something worth paying attention to. The relationship between Nasdaq and Nvidia. Nasdaq was down 0.84% today, down 181 points. Again, I talked about the rising wedge. I talked about this divergence right here. Again, this could be a peak for Nasdaq. But again, if we pull back further, you got the gap fill down here, and we have, again, a larger divergence if we try to bounce gap support here, or sooner rather than later, you got a divergence that could develop here. Either way that plays out still and take us to higher highs on Nasdaq. So don't rule that out. I'm looking for clues. It may be done. Diverges with the S&P. And again, does the S&P have the ability? Does it have the ability to go up and go a little bit higher? My guess is that's going to be the case. We'll be watching Nasdaq closely. Remember, the S&P got the 13.9. We're turning down off of the trend line from the July high. Nasdaq, and this is a daily time frame, and Nasdaq, again, we got the 9 count last week, went a little bit higher there on Friday. The upper boundary of the rising wedge overthrew that level just a little bit, and then now we have a down day. So we'll be watching what becomes of this 9 count. These other 9 counts over here, it marked a top. Every day we got it over here, we went a little bit higher, just like right now, we went a little bit higher, and then we started to sell off. Got the 13 count, and we got a little bit of a pullback. We'll be watching to see what becomes of these counts. Nasdaq daily chart here. And still watching this divergence on the Dow. We came up to the upper trend line here, turned off of it. We're below the 10, still above the 20. MACD's rolled over today. So again, we'll be watching. Do we get a larger divergence? Has the Dow peaked? The Dow's turning off this trend line, this channel in the weekly time frame. You've got these nice looking divergences, MACD, the price oscillator, multiple point divergence on the RSI. Dow does end up trying to rally. Do we go up and hit the trend line one more time, or do we get a lower high? Got the divergence going on with the Russell, the RSI here, and on the MACD, and the stochastics rolling over. The IWM ETF was down 0.5% today. If it ends up rallying back up, does it go back up and hit that trend line, or do we see the Russell diverge with the S&P 500? We've had a divergence. We got a peak last week on the S&P 500, and Russell peaked back in late November. I think it was the 25th. Sometimes they diverge at turning points, so it's worth watching. It has its divergences here in the weekly time frame as well, and again, hitting that upper channel line, turning down off of it. So again, has the Russell peaked? Trend line just like the Dow. Stochastic starting the week off, trying to roll over here in the weekly time frame. And again, RSI has been positive through the uptrend. If the divergence plays out, we go into levels below 50 here on the RSI, then that will likely confirm a reversal.